In this chapter, we review budgets. Typically, budgets are a little bit easier for students because they understand the need for a budget and what these budgets can do for you on a personal level. What we want to look at is, now let's translate that into the knowledge we need on a business level. So this chapter will go through all those budgets, but it'll also tell you different ways to develop these budgets and the advantages and disadvantages of those. And some of the other areas you can use this budgeting information in. But the budgets themselves have not changed. You still have your production budget, your direct materials, direct labor budgets, your overhead budgets. So this should be a review for you for managerial accounting. If it's been a while since you've taken that course, make sure you review my managerial lectures that I put into Blackboard for this. Also remember there's those 5-minute videos. If you just need one particular concept, a refresher in that area, go to that area and find that 5-minute video. In budgeting, you'll find that there's one formula that you're going to use often. It's this, what your book calls a basic inventory formula, but you're going to see that most of your budgets are going to use this. You take your budgeted needs, add in that desired ending inventory, which they're going to tell you how to calculate. That's going to tell you how many products you need. You subtract your beginning inventory, and you'll have that total required for your budget. So let me show you how we apply that formula into some of our problems here. The tricky part about the budgeting problems is finding the information that you need. In these problems in particular, you need to make sure you read through the problem carefully. For example, in this problem, they're telling you what kind of budgets and company they have, but then they also tell you that they want to keep on hand a stock equal to the tiles needed for the next 3 months. So even though they don't tell you specifically, this is my desired ending inventory. And then it goes on to say how much the tiles cost. We're going to need that information. Maybe you want to circle that so you can find it easy later. And then it goes in and tells you that they have 28,000 tiles in stock currently. So that's my January beginning inventory. And then it gives you the other required information. So as you can see, we're going to build a budget for 3 months, yet they're giving you 6 months of information. This is because you'll need that information to calculate that desired ending inventory. So again, this is your basic formula that we just went through, except depending on what budget you're going to have, your beginning line items and what we call them are going to be just slightly different. Here for the production budget, we start with our sales revenue. For our sales revenue in January, they're just giving you that information. February, this is coming again directly from that schedule. They're telling us that this comes from that sales budget. We bring it down to the production budget. Next, we want to add in that desired ending inventory. This is what your homework is calling it, but it's the same thing. Their homework calls it that estimated sales inventory. But remember, this same formula we're going to use often. So we have to review that their desired ending inventory is equal to the next 3 months of sales. So for January, we have to add those next 3 months of sales. If I add those numbers together, it's 45,200. Then I can move to February. In February, you don't count the month that you're currently in, it's the next following 3 months. So the following 3 months, March, April, and May, if I add those 3 together, I get 37,000. And then finally, we look at March, which would include April, May, and June. And here, if I add those three together, I get 31,000. So I'm going to go ahead and bring those numbers down. 37,000, 31,000. I can add those together to get my total needs. My total needs would be 57,600. Here those total needs would be 54,800. And here that would be 46. Nope, I'm adding wrong. 44,200. Now we need to bring in our beginning inventory. In January, remember they told us what that was, 28,000. In February, we need to find our beginning inventory. But remember, your beginning inventory is equal to last month's ending inventory. Just like you're going to say January 31st is our ending inventory in January, that's going to be the same thing as really February 1st. So I'm going to bring that number down here. And the same thing goes for March. My beginning inventory is the last month's ending inventory. So this number should be 37,000. Then I'm going to go ahead and subtract those two numbers to determine how much I need to purchase. 9,600, 9,600, and 7,200. And I also want to know how much this is going to cost me in total so I can bring that to my cash budget later. And since they each cost $3, this would be 88,800, 28,800, and 21,600. So as you can see, as long as you get the problem set up with that basic equation that we're going to use and read through the problem carefully, you're going to have all the numbers you need, and it's just a matter of putting them in the right place. So let's walk through one more problem, a little bit more difficult problem. Again, this is in your book and you have the option to practice through. I pulled this one out because this is a lot of information, and I just want to show you how finding that information is important, and then also using it where you need it. So I know it can get overwhelming, but break it into little sections, find what you need to find, and then use it. So first of all, we need to prepare a production budget. What they want us to do is calculate the total cost, but we need to know how much we're going to make first. So the first thing I'm going to go and find is my estimated sales. I need my estimated sales to start the whole production budget. So if I read through, I can find in this area here, it's given me the information about sales figures. And we're building this out for year 2. So my expected sales are 210,000. It tells me, and this can get a little confusing, the current inventory is 20,000 units and they want to see a reduction of 10,000 units. Therefore, my desired ending inventory is 10,000, which means I need a total of 220,000 units if I add those together. But remember, I have some beginning inventory, which they tell you right here what that is. And it was 20,000, which means I need to produce a total of 200,000 units. Now I can start figuring out my costs, doing that direct materials, direct labor, and overhead costs based on the fact that I know I need to produce 200,000 units. So looking at this, let's do our direct materials first. And because I already read through this problem, I know, switch so we know where we find this. This is all part 2. All the information you need is going to be in here. They tell us that they're going to increase direct labor costs by 4%. They also tell us that steel is going to decline by 10%, and they're telling us about depreciation costs are increasing by 6%. So this is all information I'm going to be pulling out to make sure I remember that. So I want to highlight it or write in your book, do whatever you need to do to make sure when those items come up, you remember that there's something different about that. All this information in that first paragraph is just telling you that they have capacity to do this, and it's just general information. So for direct materials, we have 2 materials that go into this, and this is where this whole chart comes in. We have steel and alloy coming into this. The steel part, remember, should trigger, oh yeah, that declined by 10%. So I know that steel is going to only be 90% of those costs. So I'm going to bring that information down here and note that for steel, I'm making 200,000 units, and that each of those units, I think, cost 3 pounds, or I need 3 pounds, and they're each costing 50 cents per pound. But remember, all of this, I'm only going to use 90% of that because our costs went down. So I'd multiply the whole thing by 0.9, which gives me a total cost of 270,000. I also need alloy to make this product. Again, I have 200,000 units. I don't remember the alloy figures. If we scroll up here, they're $2 per pound and they need 0.5 pounds. There was no change. There's 0.5 pounds and they were $2. There was no change for this year, so that's going to be 200,000. I'll add that together and I'll have my total materials cost. Then I'll move on to direct labor. It should trigger something in your head, or maybe you wrote yourself a note, that direct labor, those hourly direct labor costs increased by 4%. So I can go up here, look at those direct labor costs, which are right here. They're 0.02 hours at $25 per hour. So I'm going to come down here. I'm going to know I need to make 200,000 units, that each of those take 0.02 hours, and that they're $25 per hour last year, but in year 2 it's going to increase by 4%. To do an increase, I have to pay 100% plus 4% of that. So I would multiply that by 1.04, which if I add all that up, it comes to 104,000. Now let's go into our overhead costs. We're going to bring each of these figures down, and I might try to just to save us time and a headache from scrolling. I'm going to bring that down here. and then we're going to calculate our overhead. Remember, we're going to times all of this by that 200,000 units. So I'm going to put that right in the middle, because each of those are going to be multiplied by 200,000 individually. And then we're going to also have to look at that depreciation. Remember, depreciation, that increased, I have to double check, there was an increase by 6%, which means for depreciation alone, not only do we have to pay 100% of what's coming in there, but times this also by 1.06. Since that was a 6% increase, we're going to have to pay 100% plus 0.06. And then we can do all this math. So for indirect materials, we're looking at a total of 120,000. If I take the 0.6 times 200,000, if for indirect labor, I'll take 0.7 times 200,000, and I'll get 140,000. For utilities, I take 0.5 times 200,000, and I get 100,000. For that plant depreciation, I'll take that 1.06 times 0.9 times 200,000, and I should get 238,500. And then that last one is the miscellaneous. Take 0.7 times the 200,000, and I get 175. I'd add all of these up together for that total overhead of 773,500, and I can get a total cost then if I add my 3 product costs: direct materials, direct labor, and overhead. So as you can see, the math and putting together numbers are not difficult. It's really making sure you read those problems carefully to find the information you need. If you need help, let me know and we'll help you work through some of these other problems.